the biggest thing that we see at the moment is the valuation disparity between cyclical stocks and defensive stocks. You can also cut it a few different ways. People talk about growth stocks versus value stocks. People talk about low vol stocks versus high vol stocks. No matter which way you cut it, we're at extremes where popular stocks have been bid up and unpopular stocks have not been bid up nearly as much. And I think the other interesting thing that we've noticed is that there's a puzzle around profitability. Some companies that are profitable, the market is extremely paranoid about those profits going backwards. But if a company doesn't have profits, it's almost as if the market says, well, no profits, no worries. And so that's the other intriguing thing in the markets today. Cyclical stocks are the stocks that are tied to the economic cycle. When the economy starts growing again, they tend to do well. Defensive stocks tend to be the ones that are considered, defensive. They don't have the same variance with the economy. And I'd say defensive stocks have been really bid up. People are seeking safety, and they're as expensive as they've ever been in history, whereas cyclical stocks are about as cheap as they ever have been. The interesting thing about that at the moment is that typically, before a crisis, defensive stocks are the ones that have lagged the market, and cyclical stocks have been doing really well. And this crisis has been quite different. Cyclical stocks had already been performing quite badly in the way into the crisis, and have performed even worse during it. Whereas defensive stocks had been doing really well before the crisis and have continued to outperform during the crisis. That's strange. It's not normally the case, and so you kind of have to ask yourself if that makes sense or if that's an opportunity. We see it as an opportunity. In the lead up to the crisis, we'd been letting go of a lot of our defensive positions and tilting into cyclicals because they had already been diverging from defensive stocks in the lead up to the crisis, and they'd been getting cheaper and cheaper. The crisis has accelerated that, and we've sold our last few defensive stocks like Telstra and Coles, and really tilted the portfolio even more into cyclical names. In the short term, non-fundamental factors always play a role. You've got things like liquidity events, you've got trends being followed that naturally mean that the fundamentals, the earnings of a company, are not being reflected in the stock price in the short term. We've definitely seen a bit more of that, and probably a feature of that is also the growing importance of index funds. I don't really know what that does on an ongoing basis, but my sense is that momentum, it adds to momentum in the short term at least. And so we've certainly been seeing a lot of that recently. While that has been happening, it hasn't really changed our process. We're sticking to our knitting, buying unloved companies at very good prices. And so yes, there's more noise, but we think the valuation signals are still there.